Mortgage rates are really shaking up the housing market in 2025 compared to what it was earlier this year. Welcome to your guide of how interest rates are affecting buying, selling, and investing in Northern Nevada. My name is Paul Denham, and we help people with real estate who's moving in, out, and around Northern Nevada. We'd like to help. Our information can be found on the pinned comment below. For most of 2025, rates have been around 7%. But in quarter three, we have seen a drop, now hovering around 6.5%. This is the lowest rates have been in 2025. How is that affecting today's market? Right now, median prices continue to stick around $615,000 for homes in the main Washoe Valley area. Now, this market, as a nation, as a state, is continuing to soften. So we have started to see prices go down. We have been seeing start days on market rise, inventory rise. Almost all of this has been driven by rates. We'll unpack how rates affect affordability, demand, and your next move in Northern Nevada. As of quarter three, inventory sits around 3 to 4 months, where before inventory sat around 2 to 3 weeks. It's a substantial change, but still not quite what we consider a normal, balanced market. By definition, we really have to surpass 6 months of inventory to be in a true buyer's market. But make no mistake, there's a new buyer advantage that hasn't happened for the last 3 to 4 years. And there still continues to be 2 groups of inventory. Overall, houses take about 39 to 46 days to find the correct buyer. But there's still properties that sell over asking price. There's still properties that sell in less than a week. So we're really seeing 2 groups of sellers. We're seeing the sellers that aren't quite connected with today's market, pricing their homes as though it was last year, and then they sit and nothing happens. So either 2 things either happen: they reduce their price or they leave the market. And a lot of these folks are leaving the market. Right now, for withdrawn and expired listings, it is the highest in the last 10 years. And we're not talking by a little bit. We're talking by 10x, 20x compared to normal withdrawn listings. So now that we're reaching quarter three, we are starting to see this other set of inventory finally leaving the marketplace. But it makes sense on why. This market has changed so quickly, there's not a lot of data for some sellers to understand the current values of their home. We're about 30 to 60 days from that data finally starting to tell the story. So when realtors walk into homes and give an idea of what their house will sell for, they'll have data to support it. Because in a declining market, it's really hard to explain it without data. So if the seller doesn't trust their realtor and their advice, they'll overprice their home. Now, the experienced realtors will just respectfully decline and leave. But there's a lot of realtors out there that'll take anything and knowingly overprice the home just so they can get their sign in the front yard. Why do rates matter? First and foremost, they affect affordability. At today's rate of around 6.5%, 6.7%, a $615,000 home, the median price in the Washoe Valley area, with 20% down and today's taxes and insurance, comes to around $3,300 per month. Then when you talk about the lower down payment options, like first-time homebuyers or people pivoting from renting, a $3,000 payment to $3,300 payment ends up being around a $450 to $475 purchase price, far below the median sales. So that's why we're seeing this giant gap in affordability. For a lot of folks, anything over $3,000 is a lot of money and hard on them to maintain. So when you talk to most buyers and their comfort levels being in the middle twos, there's not a lot of options available. And it does affect their ability to buy. So they either wait for rates to go down or they increase their down payment. Right now in quarter three, rates are down. We're down a full 0.5%. This can change a lot of a buyer's purchasing power because now they can buy a home between $20,000 and $25,000 more and have the same payment as they did at the beginning of the year. So interest rates and affordability really matter. So where does a pivot happen? When we talk about these numbers, they leave Washoe Valley. They start moving east. Fernley, Fallon, Dayton, Silver Springs. All of these homes lie in this price range so that a person can have a $2,500 payment, even with a low down payment program that many first-time home buyers use. So how's it affecting sellers? They're having to drop their price because now most buyers have extended beyond their affordability and they're no longer tolerating it. So overpriced properties, they will gladly sit on the market and move on to serious sellers. So how do you present yourself as a serious seller? Either price knowing that the market is declining, so pricing under historical data, and if you get it wrong, be absolutely willing to drop your price, showing today's buyers that you recognize the affordability issues, but you still want to work with them. The beginning of this year, near 25% of all home sellers dropped their price to sell. Now that is climbing. We are reaching numbers near 40%. Here's 4 impacts of how interest rates affect the market. Impact 1, we just talked about it, affordability. Now we consider typical mortgage rates between 6 and 8%. The problem is over the last 4 years, prices have adjusted to a 2 to 5% market. And those rates are long gone and fair to say will never return. So now the anticipation people hope for is rates between 5 and 6. Well, even today, with the correct negotiations and the promotions of certain builders, you can already get those rates. We're even seeing rates in the 4.99% ranges. So they're already here. So those buyers holding their breath and waiting for rates to go down, you might be waiting for a long time and indefinitely. And remember, when you're paying rent, it's 100% interest. You have no tax advantages by writing off interest. Your landlord's writing off that interest, and you're building your landlord's equity, not your own. So be cautious waiting for a fraction of a percent change, because all that savings might be eaten up by the rent you're wasting. So now that we've been a full year of rates near 7%, finally coming down to 6.5%, we're finally seeing the market adjust to it. We are seeing prices go down. Will they crash? No. There's too many people moving to Northern Nevada. But will they soften and adjust to today's rates so that affordability starts to balance? Yes. And remember, the market sets the price. If there's people that could not afford to own a home at $615,000, nobody would buy it and the price would drop. That's not happening. They're being purchased. So we talk about affordability. We talk about it as a general concept, but it doesn't mean that nobody can afford a home. People can afford a home at $615,000. Otherwise, it wouldn't be at that price. Impact 2, really affecting the high-end markets. Now, we do see a lot of the high-end markets be purchased through cash, but there's still a lot of people that do use mortgages to purchase homes over the million mark. Once you get to like the 2 and 3 and 4 million, we see more and more cash purchases, but there's a lot of inventory right now between the 1 to 2 million range in Northern Nevada. That market is softening. Inventory is skyrocketing, as is competition. So from the seller side, that market is getting one of the hardest hits compared to the other price points in the market. Now, we don't very much see jumbo loans in these price ranges. Buyers are putting enough down to stay below the jumbo loan category. The reason that matters is jumbo loans are higher interest rates than what's usually published. In the cases that I see, buyers are putting enough down payment to stay in the conforming normal loan programs. But now that gives buyers a lot of power, a lot of choice. If your home is in the 900 to 1.5 million range, really pay attention to your competition. Jump markets, jump zip codes, because those buyers have lots of selection. And they're very picky because they get the freedom to be. There is plenty to choose from in today's market in the 900 to 1.5 million range. And those sellers tend to be taking the hardest hit in today's market adjustment. So your secret to selling? Undercut your competition. Out-present your competition. If your home needs remodeled, it's okay, but price accordingly. Excite buyers to want to remodel your home if you intend not to do it yourself. Because they're not only looking in your neighborhood, they're looking 2, 3, 4 neighborhoods over, a different zip code, a different area, because buyers that can purchase in that range have lots of choice, lots of selection, which means lots of competition for you. Impact 3, forcing seller price reductions. This goes back into competition. Really, what price reductions are is to outcompete your neighbors, outcompete your competitors that are in the next neighborhood, next zip code over. So now that we're seeing this softening market and there's more and more for buyers to choose from, sometimes they won't focus on an overpriced home and offer less. Often their attention is drawn to the seller who's reduced their price. So every serious seller in today's softening market should have price reduction as a part of their strategy, because it can be very difficult to get it right the first time. Next is boosting refinance opportunities. Now be careful when I say this. We're not talking about for everybody, but there was a period 2 years ago when rates got to 8%, and there are some buyers that purchased in that market. So when we start seeing rates down in the 6.5% ranges, that can be profound savings for a lot of those buyers. So if you purchased your home in the last 2 years, it might make sense to start researching refinancing ideas. Just be cautious about how much farther they stretch it out, and be cautious about how many closing costs they hide inside of the loan balance, because that can eat up a lot of the savings that you're trying to gain through the reduced interest rate. Now, the conforming programs like Freddie Mac, Fannie Mae, a lot of them have embedded loan programs that don't cost you, and you can talk with your existing lender about that option. Just be very cautious about the closing costs, because even though the payment looks lower, it's lower because they stretch your loan out farther. And be careful about the closing costs that they hide in the balance of the loan. It can quickly eat up your savings on the interest rate you're trying to get. Then we have the improvement of SALT reductions. That's your local taxes that you can write off now under the Big Beautiful Bill Act. Most homeowners in Northern Nevada see benefit from the increased deductions of the SALT taxes. So that can increase disposable income, improve the ability to maybe purchase a higher price, or be more comfortable with your monthly payment because more of it is allowed to be written off at the end of the year. So the improvement in SALT deductions does apply to most Northern Nevada homeowners. 3 tips for navigating today's interest rate market. Tip 1, shop for the best rates. No 2 lenders are created equal. Now, your realtors built a lot of relationships over the years to have an idea of who they are aware of that's the lowest. But remember, the way lenders charge is they pad their interest rates. So they'll talk to you about being the same closing costs as everybody else, and they're probably right. But no 2 interest rates are the same. And the lender that has the least amount of overhead has the ability not to have to pad their rate as much as others. So remember, no 2 lenders are the same, and every lender has different interest rates. And if you let your lender know you're shopping, they do have the freedom to sharpen their pencil and tighten up on those margins, saving you hundreds and thousands of dollars over the life of the loan. Tip 2, this is a seller tip. Price 1% to 2% below your competitors. Show the buying market that you understand today's changes and show that you're accommodating them. This will put you in front of the competition and catch their attention far better than a person just trying to price high and see what happens. So look at the true data of what's happening. Don't focus so much on the solds because the market's going down. Focus on the under contract homes. Focus on your current competition that has not yet found a buyer. Right now, in our changing market, when we're providing opinions of value, we focus most on the available homes, your competition. We focus second most on the pending properties. And we give very little weight to the solds because in a declining market, solds is obsolete data. Works great in an increasing market, works great in a level market, but we're not in either of those. Then we go to the second least, under contract properties. It really matters on when they went under contract. If they went under contract 2-3 months ago, obsolete data. That's a different marketing price, a different market. Mostly now we focus on actives, properties that have not yet found a buyer. How long are they sitting? What price are they at? How is their presentation? Because if they have great presentation and they're sitting, we need to know about that. It means they're at the wrong marketing price. It means they haven't excited buyers to write offers. We need to think about that with competition and how do we undercut them? How do we get ahead of them so that our sellers can get offers? Think about that when you're considering selling on the right pricing strategy. Tip 3, explore other areas and loan options. There's a lot of incentive programs for certain people with regards to loans. Just be cautious on some of the incentives because although you'll get more money maybe upfront, you might see a higher interest rate, which can really affect your loan payment. So I say consider the loan programs as a last resort, unless it's a 0% program, because a lot of these can get buried inside of your payment and get back to messing with your affordability. Also expand your areas. The 615 median prices in Washoe Valley. As soon as you go east, everything changes. It's common to have houses in the 3s, 4s, and there's lots of selection. So consider Fernley, Fallon, Dayton, Silver Springs. Those are great options for affordable housing. And there's some really nice homes in those areas. The market's changing. And as a buyer, this is a moment that you can take advantage of because just like the last time prices went down, this moment will end. There's too many people moving to Northern Nevada to allow a huge crash. And eventually this will balance and prices will start rising again. Do your research on mortgages. Do your research on available interest rates. Review the market. Think about the seller's pricing. And when you're thinking about selling, be realistic to today's variables and outcompete your competition. This will help both buyers and sellers succeed in the Q3 2025 changing real estate market.